SpaceX is about to go public in the biggest IPO in history. But how are you going to get in on this IPO before it explodes? Requesting shares in your brokerage is going to be a gamble at best, and I might have found yet another way to own cheap SpaceX stock before it goes public. You guys know my track record here. Remember when I called out EchoStar because it held 2% of SpaceX the market wasn't valuing? The stock nearly doubled since my video. Or how about that video I made on Stack Capital back in March? It holds a big chunk of SpaceX, and it's up around 50% since my video dropped. Of course, past performance doesn't guarantee future results, but today you'll learn about a NASDAQ listed ETF with a 20% SpaceX position valued at $1.4 trillion as of May 11th. Meanwhile, SpaceX is targeting an IPO valuation of $1.75 trillion. So in this video, I'm going to break down why this ETF is the cleanest trade for retail investors to lock in SpaceX exposure before this historic IPO. Before we begin, remember my videos are not financial advice. The data used in this video will be out of date upon publication, so be aware, and please read the full disclosures below in the first line of my description. The story of this ETF begins with Joel Schulman, a Harvard-educated finance and entrepreneurship professor at Babson College. His thesis was simple. Companies run by founders or by deeply engaged operator CEOs tend to outperform the market. Joel built a hedge fund in 2005 to prove this, and his Entrepreneur 30 Index, which selects stocks meeting 18 criteria like founder ownership and revenue growth, outperformed the S&P by 3x. One notable stock Joel selected was NVIDIA, back in 2005 at $5 a share. Joel's strategy was so successful, he launched the shares ETF in 2017 to bring his VC-inspired investing viewpoint to public markets. But in August 2024, everything changed. shares relaunched the fund as XOVR with a new mission. Take that public market VC thesis and add concentrated private company exposure inside the ETF. Last year, XOVR became the first ETF to successfully take a private company through to IPO inside its portfolio with Klarna. And today, XOVR holds 32 positions, with SpaceX SPV exposure at roughly 20% of fund assets, or $230 million as of May 11th. As for the rest of the holdings, it's a lot of names you'd recognize. NVIDIA, Alphabet, Meta, plus companies like AppLovin, Robinhood, Astera Labs, Tesla, and DoorDash filling out meaningful weights. What's kind of wild is there's also a small Anduril SPV stake as well. These added up to around $1.2 billion in total assets as of May 11th. But of course, the most interesting part about the XOVR story is that SpaceX stake. So here's what that looks like for investors. The pace of news around SpaceX recently has been genuinely insane. Not only is it building interplanetary infrastructure and the future of connectivity with Starlink, but it's now an AI company with the acquisition of XAI and Cursor, as well as a $4 billion Anthropic compute deal. For these reasons, the value of SpaceX has ballooned from $400 billion in late 2025 to a target IPO valuation of $1.75 trillion. But the managers behind XOVR saw this early. They've been holding SpaceX exposure since 2024. You've probably seen Eva Ados on Fox or Bloomberg before. She's one of XOVR's fund managers, and she's been talking about the SpaceX story for years. So I had to bring her on and ask her why they made such a concentrated pre-IPO bet on this company.
Tell me why you guys are so bullish on SpaceX. Like, why did you guys choose this company out of all the companies that you could possibly, trade pre-IPO? Why are you guys so excited about SpaceX?
So we're looking for a moat. And in the case of SpaceX, is not just one moat, because you have what we call a three-engine empire. So each of these engines have their own moat, and they all work together. They are interlocked. So what we noticed was with SpaceX, you have obviously the core, which is the rocket operator that accounts for 90% of all mass to orbit. That's a huge, you know this better than anyone. That's a huge number. It's not like the US mass to orbit. It's 90% of the global mass to orbit. And then it's the most cost efficient. They went from $54,000 per kilogram to now $2,000 to $3,000 per kilogram with Falcon 9, and they're shooting for $100 per kilogram. So they outbeat any competition, and we believe also in the long-term future that's going to be the case. And then you have Starlink, which has its own mode. And now we have SpaceX AI, which is the new arm, which we believe might compete with many AI companies in the future and be the leader there too. Because from our perspective, when it comes to AI, and we did look at OpenAI and other AI companies to consider for the XOVR ETF, you can replicate most LLMs out there. So to us, the mode is the infrastructure around a company. So when it comes to AI, XAI now, SpaceX AI has a huge moat with the data centers up in the space. And when your competitors are using you, when Amazon Leo, in order to meet the FCC deadline, they need to use SpaceX. When now Anthropic is using Colossus One, this shows you when you convert your biggest competitor to your biggest customer, that is an actual moat. So all these three reasons were what we think SpaceX will be the Magnificent Eight and what we believe the elite Magnificent Eight. And that's why it became the biggest weight in our XOVR ETF.
If you're a SpaceX fan like me, you've probably been aware that there are a few different formats on the market that investors have been trying to use to get SpaceX exposure. And I'm going to lay out why XOVR is a better format. The most popular way to play it has been these public closed-end funds. The problem is they trade like meme stocks, with no anchor to their valuation, no anchor to what their SpaceX stakes are actually worth. Now, part of this is mechanical. Closed-end funds have a fixed share count. That means demand spikes mean the price explodes way above the net asset value of what that closed-end fund actually holds. Just look at some of the most popular closed-end funds. They've traded up to 9 times what their holdings are actually worth. That means at some points in their trading history, investors were buying in to get just a few cents of SpaceX for every dollar invested. An ETF like XOVR functions completely differently.
Tell us how XOVR as an ETF is a different form of kind of playing on the SpaceX trade.
And to us, the ETF was the most efficient wrapper because when it comes to closed-end funds, they don't trade at NAV. In some cases, we had 2 closed-end funds this last year, that they traded about 10 to 20 times above their net asset value. So that means in order to buy a $1 candy, you're paying $10 or $20 for that candy. So with an ETF structure, you do not have this issue because it trades near net asset value, NAV. So that was the main reason why we chose the ETF wrapper. But in addition to that, you have daily liquidity, you have no lockups. So it's a very efficient structure.
If you were to have bought XOVR on May 11th, around 20 cents of every $1 you invested would go directly to SpaceX exposure, locked in at that exact percentage. Say 1 million people found out about XOVR the next day and they all bought into the ETF, your exposure would not get smaller. The way ETFs work is they just create new shares to meet that new demand. You also pay much lower fees. XOVR charges 0.75% per year, while other closed-end funds might charge 2.5%, plus other hidden fees that might add up to 5 to 6% per year. As SpaceX IPOs at $1.75 trillion, that's a real value spread that your money captures cleanly through their NAV with minimal fees, and even more so if this thing pops after it launches.
So if investors are looking just for the IPO pop, this is obviously, we believe there will be some pop, although please consider the disclosures, but this is not the main reason you should buy XOVR. XOVR is has more of a long-term horizon. We have another 30 public holdings in it and also some private exposure to Anduril. And so this, to us, is a long-term hold. And when it comes to the IPO, because I love your question, this IPO is going to be different than any other IPOs. We're speaking about the biggest IPO maybe ever, certainly in the US, but maybe globally too, of $1.75 trillion to $2 trillion valuation. And also what's interesting that many people don't know is that you have 50 to 75 billion fundraising, which has never happened before. And you also have a potential fast-track inclusion to the S&P 500 index. And what does that mean? That means that now you have about 7 to 10 trillion in mutual funds and ETFs, that's passive money that's tracking this index. And you also have 8 to 10 trillion of corporate mandates tracking that index. So that by itself gives us a 15 to 20 trillion dollar buying pressure because these by tracking the index. And so if we think that SpaceX is going to go public at a valuation which is close to where Tesla is now, 1.5 trillion, that means it's going to be a 2% weight of the S&P 500 index. So that will have a buying pressure of about $300 to $400 billion, which again is unprecedented.
Now, for all the benefits of this strategy, there are some important risks with XOVR we've got to unpack. I'd say the biggest one involves just the mechanics of tech IPOs. What we've seen lately is they tend to surge and then plummet over time. You could look at Figma, which is one of the most hyped IPOs recently. It's down 83% from its peak as of May 11th. We could look at the space sector. The biggest space IPO to date was Firefly last August, and they're down over 30% since peaking at $60. Even if XOVR is marking their SpaceX stake at $1.4 trillion, it's possible SpaceX could dip below that mark after going public. The next risk with XOVR is you're not just buying into SpaceX. Most of the fund is in these other public tech companies. Think Palantir, AppLovin, Robinhood, NVIDIA. These are all quite volatile names. They can move 2 to 3 times the market on any given day. The fourth risk is with SPV structures. Hidden fees can eat your returns. The good news is that XOVR recently reorganized their SpaceX stake into a 0-0 SPV. What that means is it carries no management fees and no carried interest, which makes their SpaceX exposure ultra clean with no strings attached beyond their 0.75% fee. But for those legitimate risks, XOVR is still one of the most unique financial products in the market. And what's arguably more exciting is that this is just the start of their strategy to add concentrated stakes in private companies into their ETF. Because from what it sounds like, SpaceX is just the start. The team at ER Shares didn't tell me exactly what they might buy after SpaceX. But what's interesting is that the fund already holds a very small stake in Anduril. For now, we'll just have to wonder, but here's what Eva told me to close the video out.
So you guys have been making this kind of pre-IPO private equity bet with your ETF for a while. Now that SpaceX is now about to go public, there are plenty of other companies that retail investors are dying to get exposure to. A lot of people know me as the kind of proxy guy. Like I kind of find ways for retail investors to get exposed to some of these private businesses that they're really in love with and that they would, really kill to have shares in. So tell us, like, what might be on the horizon? What are some industries you guys might be looking at for like what the next private equity holding in XOVR might be?
Okay, so I love the question. We're very excited because this is why XOVR exists. It's to give retail investors, like your audience, access to private equities that they've been locked out historically. And as you said, there are so many interesting companies out there. Many of them potential future Magnificent Seven are now private. So we're very excited. We're looking at very many opportunities, but we are being very selective. So you mentioned before OpenAI. We did not invest in OpenAI. We do not see it as a category leader. So we passed that, even though it's a hype name, it's a very popular name, we did not see a future in it like a category leader. So we are considering there's 2 to 3 names that we have very high conviction from, that we are considering, but I'm going to leave it here and I'll have your audience guess potentially what would that be.
Hope you guys enjoyed this video. The SpaceX IPO is going to be one of the biggest financial events in history, and it's super exciting to find creative ways to try and get exposure before the IPO because it's hard to get allocations. If you love learning about the most exciting investment opportunities around AI, defense, space, and beyond, you might love this video I made or this video I made. Thanks for watching, and I'll have a new video out soon.